In this video, we are going to talk about how to find multi-bagger stocks, so before starting this video, please like this video and subscribe to our channel for future updates. Every investor wishes to own multi-baggers in his or her portfolio, but it is not an easy task to find such stocks. Primarily, there are three factors one needs to look at when scouting for these gems. The presence of all three is imperative if you are looking to identify long-term wealth creators in your portfolio. Value markets around the world kept on developing. We have moved past 10 baggers, and presently we look for 100 baggers. All things considered, stocks that can develop your cash 100 overlap are certainly preferred abundance makers over stocks that develop your cash 10 crease. A connected term used to allude to such stocks that can increase your venture is multi-bagger, and recognizing a multi-bagger stock can assist you with developing your abundance quickly. In any case, how can one distinguish multi-bagger stocks? Here's a description of the how to find multi-bagger stocks. Let's start. High growth plus high return on capital employed, ROCE. For a stock to turn multi-bagger, the organization needs to reliably develop its income at a higher rate and needs to accomplish something very similar without weakening its profits on capital utilized. The table beneath features a couple of multi-baggers that have reliably intensified their income at an exceptionally high ROCE. Growing cash flows. The income of an organization is the most reliable measuring stick to survey an organization's exhibition. The income explanation decides the capacity of the organization to develop its profit from here on out. In the event that the organization can't produce cash from tasks, it should more than once tap markets to fundraise either as an obligation or value money to develop its business. Multi-bagger organizations, aside from intensifying benefits, additionally reliably compound their working incomes, cash benefit, steady working capital, empowering them to develop at a high speed for many years. Organizations that might perform well on the profit and income front, but not on the development front might be in a stale period of their reality and subsequently probably won't procure returns for financial backers. Prudent allocation of capital. We come to the place of reasonable distribution of capital. As we presently know, abundance creation is about the drawn-out compounding of income and incomes. Organizations that tick the over two measures will quite often produce tremendous measures of money and capital, yet the way in which an organization designates that money turns into the vital differentiator between a decent organization and an extraordinary multi-bagger stock. Identifying multi-baggers using the concept of twin engines. The concept of twin engines prominently features in Thomas Phelps' book titled 100 to 1 and also in Christopher Mayer's book titled 100 Baggers. Both of these books provide a roadmap that investors can use to identify stocks that can emerge as potential multi-baggers of the future. If you stay invested for 30 years, your investment will need to grow at an average annual rate of 16.6% so that a RE1 investment grows to Rs. 100. Similarly, you can also calculate that it will take your investment approximately 41 years to grow 100x if your investment grows at an average annual rate of 12%. Using this formula, you will find that to achieve 100x growth of your investment within 11 years, your investment will have to grow at 50% every year throughout the tenure. Sustaining such high returns over the long term is almost impossible. On the other hand, if you were to assume a more realistic and conservative 15% PA return, then it would take 33 years for your investment to grow 100x. So, if you can identify a high-growth stock, you can reach your 100x investment target much faster. How can you identify high-growth stocks? Growth in EPS, earnings per share. A company that has consistently grown its revenues, margins, and market share leads the investor's wealth to grow. This is reflected through a rise in earnings per share, EPS, of the company. The growth in EPS is important as the stock price of the company almost always mirrors the growth in EPS, especially over the long term. Growth in PE, price earnings, multiple. The price-earnings multiple is a key valuation metric considered by investors. The PE ratio indicates how expensive a stock is, however, when studied over some time, it helps us understand how valuable the company or sector has been to the investors over the years. Hence, a higher PE multiple indicates that the stock has become a more expensive investment over the years. What does it take to build a multi-bagger portfolio? The way to accomplish 100x your venture is your contributing way of behaving. The exploration led by Christopher Mayer presumed that it takes a 100-bagger organization a normal of 26 years to become one. This basically implies that regardless of whether you begin putting early, you would be in your 40s or 50s when you see your initial 100 baggers. Persistence or time in the market as opposed to timing the market becomes one of the main elements for progress, and there might be times when feelings might run high. Remaining level-headed and adhering to your objective is significant. For example, Apple is the world's biggest organization by market capitalization today. However, Apple's ride has been an exciting ride, with the stock going through a few drawdowns throughout recent years. Netflix is a significantly more extreme model, with the organization losing 25% of its worth on a solitary day in January 2022. What do you think of our video? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.